securities. Okay, we have mortgages, notarial acts, policies of insurances, okay, receipts, settlements, share warrants, warrants for goods, appraisements, instruments of apprenticeship, banknotes, bills of exchange and promissory notes, conveyance of sale, order conveyances, exchange partition or division, letters of powers of attorney and voting powers, and capital of what companies. So these are transactions that attract what stamp duty. Exempted instruments. Instruments that are specifically exempted as follows. We have three forms of instruments that are exempted. One, those relating to agreements between federal government and other foreign governments. Okay, they are exempted from stamp duties. Secondly, instruments relating to reconstruction and amalgamation. Then thirdly, transactions to and sales of properties of a company under liquidation. So if a company decides to what to file for liquidation, okay, and they decide to what sell properties, those transactions from a company that are arising from a company that are under liquidations, okay, those forms of transaction arising from a compulsory winding up by a court order, and they need to pay their words, their creditors. In that case, they're exempted from what? From stamp duty. Implication from non-stamping of instruments. What's the implication if you decide not to stamp your instruments? Instruments that are supposed to be stamped by law at the time it was first executed, but not stamped, has some implications. One, such instruments shall not be given in evidence. Okay. So such an instrument is not admissible, whether directly or for collateral purpose. The secondary evidence of the instrument is not admissible either. Cross-examination upon an unstamped instrument is not what's allowed. So those are part of the implications. Sorry, there's a real the instruments cannot be given in evidence. Then in addition, with the new finance bill of 2019, okay, there was an inclusion of the provision as to 50 naira one-off stamp duties on all electronic receipts or transfers for money. Some of you would have seen that, okay, there was an introduction of this to charge 50 naira is a one-off stamp duty. All electronic receipts or transfers of money deposited in any bank or with any banker on any type of account to be accounted for, but is amounting from 10,000 naira and above, except that money is paid into one's account. If the money is paid to one's account, for instance, you have different accounts in different banks. If it's money transferred to your own account, or as long as it's transferred electronically between accounts of the same person with the same bank, that's really exception. But if not, if it's 10,000 naira above, you'll be charged a stamp duty of 50 naira is one off on 10,000 naira. Okay, this seeks to address the controversies associated with the policy issued by CBN in this regard in a circular issued in January 2016. It also increased the amount threshold on which the stamp duty should apply from 1,000 naira per. Okay, as at then, CBN, as at January 2016, what they introduced was 8,000 naira to charge stamp duty. But what federal government introduced in the new finance bill of 2019, where you have any amount of 10,000 naira up, or the minimum charge will be 50 naira, one of stamp duty on electronic receipts or transfers of money. So that's all we have for stamp duties. Okay. So I guess by the time you're going through the materials again, it will be much easier for you to understand. So let's move on to our next topic for today. Okay. Basic ethical issues and taxation. Basic ethical issues in taxation. Okay. For generally almost accounts, in fact, I can have the ethical There are codes of what? Of ethics. Okay, codes of conduct. Okay. ICANN, IASB. But for this class, we'll be looking at what's the fundamental principles of ethics as specified by the International Ethics Standard Board for Accountants. That is the ISBA. Okay, so this board came up with 5 fundamental principles of ethics that they believe every member, in fact, every student member, because they are students, and you'll be a member very soon by God's grace. You move from foundation to skills to professional, and then be a member. Okay, you do your induction. So, but now you're a student member. Okay, so you're expected to know the 5 fundamental principles. Not only know them, but apply these principles in your day-to-day professional work activities. Okay, one of the basic ethical principle is what? Integrity. Integrity. When we say integrity, what does integrity mean? Okay, integrity, when you say integrity, it means when you say an individual has integrity, the person is what? Is straightforward, the person is honest in all dealing, the person has the highest form of what? Integrity. So this what? This principle we are all expected to what? As accountants, as professionals, as chartered accountants in the making, as my professional colleagues to be soon, okay, you're expected to have what? Integrity. A professional accountant shall comply with the principle of integrity, because integrity requires an accountant to be straightforward and honest in all professional and business dealings or relationship. You should be honest and straightforward. When you say this is a true, this audits, the financial statement gives a true and fair view. It means the financial statement gives the true and fair view, gives the current state of that what, gives the current state or the current position of that entity at that particular period of what time. Be straightforward, be honest in all your professional dealings, in your business or dealings. As an accountant, as a student member, as a chartered accountant, you should be what? You should be honest and straightforward. Integrity implies fair dealings and what? Truthfulness. These are just what it means is that in the paragraph of the IASBA, this was how it was stated in each of the paragraph. Okay. It goes on to say professional accountants should not knowingly be associated with reports, returns, communications, or other information where the accountant believes that the information, one, contains material false or misleading statements. As an accountant, you should not be associated with reports or returns that shows an information contains material, that an information is materially false or is misleading statement, or a material or a statement or information is what is reckless, provided what recklessly, was provided recklessly, or the information was what an information was omitted, okay, or it contains what obscurity that could be what misleading. Either of these options, an accountant should not be associated with such what report and return. This is actually common, especially in the field of taxation. Okay, there you have of chartered accountant or accountant, or those that act as tax consultants for companies. Okay, I heard that's actually common. Yes, some firms, in fact, they are the ones that will even help the company, okay, to falsify the information, reduce your revenue, reduce everything, just to ensure that the information suits the amount of tax that you intend to, or that the company wants to pay for that particular year. please, as an accountant, you should be what? Honest and straightforward. You should not be involved in any form of report or returns that are false, or that is false, or that has been provided recklessly, okay, or that omits the words, the true information or the true position of that company or that report or the returns. Okay, let's continue. If a professional accountant provides a modified report in the case of an audit report, okay, in respect of a report, return, communication, and other information, the accountant is not in breach of what? Paragraph 112A1, okay? Um, okay, I think you will understand that more in audit, okay? For audit reports, there are two forms of reports. We have the unmodified report and we have the modified reports. For the unmodified report, when we say an unmodified report, say that it's a report that gives the true and fair view of the company. Okay, when you say a report gives a true and fair view of the company, okay, materially, the information that's contained in the report is what is accurate. There is no information there. You mean? Okay, let's continue. So when there are cases where an audit report can be modified, more unmodified report is a true and fair view. There are cases where a an audit report can be unmodified. Okay, one, limitations by scope. Probably the auditor is what's limited. You do not have all the accurate. You don't have all the information that you have requested for. Okay, for instance, I am an auditor and I go to audit a company for January 20, the period involved is January 2018, December 2018. Okay, so that's a year involved. So by the time I get to the company, before there, I would have requested for a lot of documents. On getting there, I'll now request for some certain documents, their cash book, their journals, and so on and so forth, their receivables, and so on, all documents required, okay, as requested by me. I will now realize that, oh, I did not have certain information for April 2018 to September 2018. And then I begin to ask, why is it that this period was not captured? Well, now, probably they said there was a fire incident, and then all the documents that they have concerning that period was in a particular building that was burnt. Calculate from April to September. How many months is that? April, May, June, July, August, September. That's 6 months. And we in at the period I'm looking at is a period of what, 6 months. 6 months. If the information that is contained in that 6 months is material, like it's material, it can affect the opinion I'm to give, then there's every possibility that my report will be what? Modified. Okay? Because all the information that have been requested by me is not be given. The period covered, I do not have all the information from January to December 2016. So in that case, a professional accountant can actually provide a modified report. It is allowed. You are not breaching any words, any law. Okay, as long as that is the true position of that company during that period you are auditing. When a professional accountant becomes aware of having of when a professional accountant becomes aware of having been associated with informations described in paragraph, these informations, if a chartered accountant is what aware that these informations are materially false, or they are misleading, or they've been provided recklessly, or they have omissions, okay, or contains obscurity that could be misleading, Any professional accountant should what take steps to disassociate from that what information. The second fundamental principle is what is objectivity. When we say objectivity, it means that a professional accountant should comply with the principles of what objectivity. Principles of objectivity means that an accountant should not compromise his professional or business judgments. You should not be biased. You should not have conflict of interest or what undue influence of what of others. That's what it means to be what to be objective. You should not be what biased. As a chartered accountant, you should not be biased. True. When you are straightforward, you will not be biased. Okay. Conflict of interest should not what arise. There are cases where conflict of interest arise. You should be able to use your professional judgment to what to address that. Okay, I think this is foundation. Anyway, you do more of this ethics part when you get to your skills. Okay, so conflict of interest or due influence on others. A professional accountant should not undertake a professional activity if a circumstance or relationship unduly influences the accountant's professional judgment regarding that activity. You should not be biased due to you could have different forms of interest, different forms of traits as a professional accountant. Familiarity checks can exist. For instance, as an audit company, as an audit firm, sorry, you've been auditing a company for over 7 years. Familiarity traits will exist in relationship, okay? And the audit firm partner, I've been auditing this company for over 7 years. I will know the MD, I will know all the staffs. We now have the relationship we have as now may even go beyond professional relationship. Familiarity interest. And because of that, the accountants may be a bit biased. But in this case, they are trying to say that you should be objective, okay, irrespective of your words, of those traits that you may experience. Even traits, there could also be traits of what? There could be also be financial forms of trait, okay? Different forms of traits that an accountant can experience. Okay, I say you look more into that when you get to skills level, okay? I don't want to bring a lot of that in now. So you get to skills level, okay? So, excuse me, for a professional accountant, you should not undertake any professional activity if the circumstance or relationship is duly what it will unduly influence the accountant's decision or objectivity. Then we have professional competence and due care, which is the third what fundamental principle. A professional accountant shall comply with the principle of professional competence and due care, which requires an accountant to one, attain and maintain professional knowledge and skill at the level required to ensure that a client or employee organization receive competent professional service based on current technical and professional standards and relevant legislation. You see what I was saying earlier on during the class, okay? That you should not just only read to pass, read to know, so that wherever you are as an employee or as an employer or an employee, you should what? Attain and maintain professional knowledge. You should be up to date as an accountant. You should be up to date with current what laws, current standards that are needed. Be up to date to ensure that your employer receives the best technical and professional standard that you've gotten so far, and apply it to your work, to your everyday responsibility in the office, even as an employer. Okay, the same thing applies. Like then we have like the FCAs, okay, the FCAs, those that have more than 10 years experience, if 10 years experience, okay, or 5 years, if they're in practice 5 years, they are not in practice 10 years, okay. for the FCAs as are there, most of them, the syllabus at which the syllabus they use then when they were chartered is different from this current syllabus. Okay, if most of them do not update themselves with knowledge and they are working in environments where they need to apply this knowledge, you can see it also what affects them. So that's why it's expected that as a chartered accountant, even as a student member, you should always what update your knowledge about the day-to-day changes that are currently happening in the what in the accounting world, even beyond the accounting world. Okay, taxation. Some of us have not even up to date. We've been hearing of finance bill. We've not even taken our time. Google is our friend. Always you can go there, type finance bill 2019. Even the stamp duty we just talk about, stamp duty is out. You can download it and go through it. Okay, update your words, your knowledge. Then, as an accountant, you're expected to act diligently and in accordance with applicable technical and professional standards. Okay. Excuse me. Serving clients and employing organizations with professional competence requires the exercise of sound judgment in applying professional knowledge and skill when undertaking professional activities. When you are serving clients or those that are employing and employing organizations, okay, your professional competence should be that of what sound judgment. And for you to apply sound judgment in any professional activity, you have to be what up to date. Okay, maintaining professional competence requires a continuing awareness and an understanding of relevant or technical, professional, and business development. That's why I can really say that as a member, they introduced what we call the MCP, the mandatory continuing education, okay, for all their members. Okay, you can always join different faculties. Okay, so when there are new standards, for instance, you can have the financial reporting faculty. When there are new standards, you can always have all these their MCPs. Okay, they will invite you to register. You pay actually their trainings, different trainings, just to update you of the current changes that are what's happening. So daily maintaining what professional what competence is a good one. Continuing professional development enables a professional accountant to develop and maintain the capabilities to perform competently within the professional environment. Excuse me. Diligence encompasses the responsibility to act in accordance with the requirements of an assignment carefully, thoroughly, and on a timely basis. So an accountant is expected to be diligent also, okay? In compliance with the principle of professional competence and due care, a professional accountant shall take reasonable steps to ensure that those working in a professional capacity under the accountant's authority have appropriate training and what supervision. You are diligent, you're expected to be responsible to act in accordance with the requirements of an assignment and on a timely basis. Please, this is applicable to us even as student members, okay? To you as student members. Where appropriate, a professional accountant shall make clients, the employing organization, or other users of the accountant's professional services or activities aware of the limitations inherent in the services or activity. Excuse me. Then the next is what confidentiality. Hmm, this is quite important. An accountant should be what confidential. A professional account shall comply with the principle of confidentiality, which requires an accountant to respect the confidentiality of the information acquired as a result of professional and business relationship. You know, as an accountant, you're exposed to different. For instance, I'm an accountant of a company. Okay, I know I have access to the bank statements of the company, different bank statements. So to a reasonable extent, I have access to this information. However, am I expected to be confidential? Yes, even to the what? To the staffs, the other employees in the entity at which I work. I'm expected to be what? Confidential, except those that I am to what? Report to. Even those that I am to report to. It also depends on the information I'm expected to what? To report to them with. Okay. One, an accountant shall be one, be allowed to the possibility of should be allowed to the possibility of inadvert excuse me, to be allowed to the oh, be allowed to the possibility of the inadvertent disclosure, including in a social environment and particularly to close business associates or an immediate or close family words member. You should be allowed to the possibility of what disclosing any information, especially to family members, to close relations, to friends, even those your business associates, like I stated before, even to your colleagues in your words in the office you work currently working. Maintain confidentiality of information within the firm or employing organization. Maintain confidentiality of information disclosed by prospective clients or employing organization. Not also disclose confidential information acquired as a result of professional and business relationship outside the firm or employee organization without proper and specific authority, unless there is a legal or professional duty or rights to disclose, except in the case of legal. In fact, we'll look at the different scenarios that can be what that these different scenarios at which you can be asked towards to give an information that is confidential. We'll look at that shortly. Okay. Not use confidential information acquired as a result of professional and business relationship for personal advantage of the accountant or for the advantage of a third party. Okay. Not use or disclose any confidential information either acquired or received as a result of a professional or business relationship. So if you are not expected to disclose any information that you acquire or you receive as a result of your professional or business or relationship, even if that relationship has ended. As an accountant, you should take reasonable steps to ensure that personnel under the accountant's control and individuals from whom advice and assistance are obtained respect the accountant's duty of confidentiality. In fact, you should get to the stage where wherever you're reporting to. In fact, I think there was an instance where someone I once worked with gave me an information. I was like, oh, in case the manager asks you or the person in charge of marketing asks you or this asks you, give them these figures. Like I was being asked to say something else, and what the information I gave immediately was like, no, man, they won't even have to ask me because they know me already that I will not disclose information. In fact, because they know that I won't disclose such information, over time they've noticed that I can't. I'm always confidential. They can't even approach me to what so ask. And even if they ask, I'll tell them, "Oh, I'm sorry, I cannot disclose such information." So you need to put yourself in that what position where they cannot easily come and what obtain information, confidential information from you. Okay, let's continue, please. Confidentiality serves the public interest because it facilitates the free flow of information from the professional accountant's clients, or in the case of an employee organization, to the accountant, in the knowledge that the information will not be disclosed to a third party. Any other person outside that circle is a third party, as long as that information is expected to be confidential. Nevertheless, the following are circumstances where professional accountants are or might be required to disclose confidential information or when such disclosure might be appropriate. You know, I said that before. There are cases where it may be required to disclose confidential information. What are the cases? One, disclosure is required by law. If it's required by law, under these circumstances, one, production of documents or other provision of evidence in the court in the course of what legal proceeding. That's course. CAU. Please correct that at your end, okay? Or disclosure to the appropriate public authorities of infringement of the law that comes to light. So is it that you are disclosing? There could also be cases of, for instance, you are an accountant, you're involved in a country, with a company or a client that are involved in money laundering. Okay, in that case, you're expected to give the information to a party. Oh, okay. Sorry. Please confirm me if you can hear me. My host, kindly confirm if you can hear me.
Yeah, I can hear you, ma'am.
Okay, please, I need that with a student. A student sent a message that she can hear. Thank you, sir.
Thank you.
Yeah. Disclosure to the appropriate public authorities or infringements. Okay, I've explained that. Disclosure is permitted by law and is authorized by the client or the employee or the employing organization. Then there's in that case, okay, you are permitted by law or you're authorized by the client. The client has asked you to give the information or whoever you are working with. There could also be a case where there's a professional duty or right to disclose, but it's not prohibited by law. What are the cases? One, to comply with the quality review of a professional body. Okay. To respond to an inquiry or investigation by a professional regulatory body, for example, EFCC. Okay. To protect the professional interest of a professional accountant in a legal proceeding. You know, there are cases of chartered accountants that commit offense, okay, and they are being reported. So when they are reported to ICANN, those accountants are also usually sanctioned. So these are part of the principles or the fundamental principles that they get to ensure that these accountants comply with. So if they don't comply with this, it could also be an offense. Okay, so to protect the professional interest of professional accountants in legal proceeding, or to comply with technical and professional standards, including ethics requirements. Sorry. Then let's root further. To decide if for an accountant to decide if to disclose confidential information, there are factors we are expected to consider. It needs to also depend on the circumstances. Please, it's important for you to know this part. Please, because they can ask you this part in multi-choice question, okay? And ask you the conditions that are important for the accountant to the circumstances that an accountant should consider before giving an information to a third party. You're expected to list them, or the options could be in your objective A, B, C, D, E, and then you pick the answer. So if you have no idea, you may be unable to answer it. In deciding whether to choose confidential information, there are factors to consider. One, whether the interest of any party, including third parties whose interests might be affected, could be harmed if the client or employee organization consents to the disclosure of information by the professional accountant. So you need to consider if any of the third party, if their interest might be what affected, or if they could be harmed. So this is part of the factors to consider. If they can be harmed, then you now have to decide if, as a professional accountant, you don't know how to go about it. You can always reach out to what? To ICANN, okay? Inform them and they can direct you on the best way to what? Go about it. To go about it, especially when it has to do with confidential information. Or you can also reach out to your senior colleagues, okay, those that are what experienced. They can guide you on the best way to what to go about it. Whether all the relevant information, or use your professional judgment, whether all the relevant information is known and substantiated, to the extent practicable. Factors affecting the decision to disclose include: one, unsubstantiated facts, incomplete information, or substantiated conclusion. In this case, whether all the relevant information is known or sustained, because it has to do with confidential information. So you need to consider, probably all the relevant information needed by the third party is not known. The information they have is not complete, it's incomplete, or there are some unsubstantiated conclusions that have not been evolved. So those are the things you need to consider. Probably if they don't have the complete information, okay, to reach their opinion, as the case may be, you can now consider confidential information. However, in that case, you also need to reach out to if you are an employee in a company, okay, you can reach out to the employer and find out, and inform just through the due process, except it now involves criminal activities. Okay, in that case, especially when it has to do with whistleblowing and the rest, okay, there are procedures to go with that. Okay, that's quite different. But if it's like legal and you need to go, but you still need to go through the right channel, you need to inform whoever you are reporting to that, this information is being required and is being requested for. How do we go about it? So we can give them a complete information. Then you need to consider, what's the proposed type of communication? Is it written? Is it to be given orally? Okay. To whom is it to be addressed to? Then whether the parties to whom the communication is addressed are appropriate recipients. Then a professional accountant shall continue to comply with the principle of confidentiality even after the end of the relationship between the accountant and a client or employee organization, especially like for audit firms where you no longer provide auditing and tax consultancy services to a client, okay, that does not mean their information are still expected to be confidential to you, should be kept confidentially even after the relationship, even after the relationship no longer exists, irrespective of that. Even if the professional business relationship do no longer exist, you still should keep the information confidential. Okay. When changing employment or acquiring a new client, the accountant is entitled to use prior experience. I think there's some reason you go for interviews. I don't know if they do that to test. Okay, then just ask, what's the give me the range of revenue that is usually generated in your previous company. What will you say? We usually generate 1 point. No, that information is expected to be confidential. You could give them a range, okay, but you should also make them know that such information is confidential, because even if they employ you to work in that company and you also get to leave and move to another company. Whatever information you that w- that was within that was known to you, they are still not expected to what to expose. They can also, if you expose the information of the company you're coming from, there's also every tendency that when you leave there, you can also what give out the information freely. Those information are expected to be what, confidential. Okay. So when you're changing employment or you're acquiring a new client, the accountant is entitled to use prior experience, but shall not use or disclose any confidential information acquired or received as a result of a professional or business relationship. Very important. Then the last one we have what professional behavior. A professional accountant shall comply with the principle of professional behavior, which, excuse me, which requires an accountant to comply with relevant laws and regulations and avoid any conduct that the accountant knows or should know might discredit the word's profession. A professional accountant shall not knowingly engage in any business, occupation, or activity that impairs or might impair the integrity, objectivity, good reputation of the profession, and as a result will be incompatible with the what, fundamental principles. So you are expected to what, to to comply with the what, principle of professional what, behavior, comply with relevant laws and regulation, avoid any conduct that will give discredit to the profession, avoid any conduct that will give discredit to the profession. So people who say, oh, accountants are like that, oh, they always steal money, oh, accountants only do this. Don't get involved in what activities that will bring discredit to the what profession, activities that will give discredit to the professional bodies you belong to. So as a professional accountant, you're expected to engage in what business or activities that will not impair your integrity, objectivity, like we've been saying so far. Okay, confidentiality and so on and so forth, and the other fundamental what principles. Conduct, sorry, any conduct that might discredit the profession includes conduct that a reasonable and informed third party would be likely to conclude adversely affect the good reputation of the what profession. Okay, any conduct that can bring discredit to the profession, like I said earlier on, okay, that can bring an adverse effect to the good reputation of the profession. It also affects the reputation of that was individual. Okay, when understanding marketing or promotional activities, a professional accountant shall not bring the profession into disrepute. Okay, similar to what we've been saying so far. Let's continue, please. If a professional accountant is in doubt about whether a form of advertising or marketing is appropriate, the accountant is encouraged to consult with the relevant professional body. I mentioned this earlier on. If there are any circumstance or any case where you are exposed to, okay, an accountant is exposed to, and you do not know the necessary steps to take, can also always reach out, especially when it involves forms of advertisement or it involves where threats that are affecting the fundamental principles, your integrity, your objectivity, okay, your professional competence, okay, and all that. Yeah, you can also reach out to professional body, ICANN, and so on and so forth. There are the conditions when information on taxpayer may be disclosed. For taxpayers, okay, as an accountant, if you have information of taxpayers or as a tax consultant, what are the conditions to be considered before an information of a taxpayer may be disclosed? This is also important. You can be asked this. You can be asked some questions concerning these aspects. Okay. The conditions when information on taxpayer may be disclosed. The need to comply with the principle of confidentiality continues even after the end of relationship. We've mentioned that before. However, when a tax practitioner engagement with a client ends, that's the professional relationship has ended, or is engaged by a new client, the tax practitioner is entitled to use prior experience. However, he shall not use or disclose any confidential information, either acquired or received as a result of the professional relationship with the previous clients, because doing so may what may bring what mode or disrupt. It's also possible that these your new clients may be in the same industry with the previous clients, and they will not have access to the information, okay, to the information. The information of your old client has now been passed to the new client, which could affect the old client negatively. There's every possibility of that, okay? But in that case, you just need to ensure that any information between your old client should not be passed across to your new client. Nevertheless, there are instances when a tax consultant may disclose information on a client, whether past or present. These are the circumstances. One, disclosure is permitted by law, like we have said before. Is you are required by law, probably in court of law, as the case may be, or required by the tax authorities. Okay. Disclosure is authorized by the clients, that is the taxpayer. The taxpayer is aware that you are about to disclose information to a third party. Disclosure is required by law. Example of this: one, production of documents or other provisions of evidence in the course of legal proceedings. You are asked to present the documents of the taxpayer in a legal proceedings, or disclosure to the appropriate public authorities of infringement of the law that come to light. And these are informations of the taxpayer. There is a professional duty or right to disclose when not prohibited by law. If you're not prohibited by law, if the tax consultants or the accountants, okay, who has information with the taxpayer, is not prohibited by law, what are the circumstances that it can be allowed to disclose information? One, if it's to respond to an inquiry or investigation by a member body or regulatory body, such as ICANN, CITN, okay, those are member body, regulatory body, to protect the professional interests of a professional body. For example, ICANN, CITN, and not in any legal proceedings. Then, thirdly, to comply with the technical standards and ethical requirements. Okay, so it's only in those cases that an accountant can disclose the what information when he or she is not prohibited by what's law. When a tax practitioner should do what a tax practitioner should do when there is a conflict of interest. Remember when we talked about what objectivity, we said you are not expected to be professional, should not be what biased, should not be involved in conflicts of interest. In this case, when a tax practitioner should do when there is conflict of interest. When there is conflict of interest, okay, you can be faced with a tax practitioner can be to conflict of interest in any professional activity. When this conflict of interest arise and it creates a threat to your objectivity, your independence, okay, and other fundamental principles that is required, okay. These threats create when these threats are created. A conflict of interest creates a threat to objectivity and may create threat to the other fundamental principles. Such threats may be created when cases where threats are created. One, when the tax practitioner, okay, undertakes a professional activity related to a particular matter of two or more clients. For instance, as the tax practitioner, the tax consultants to two firms that compete they are competing with each other in the same industry, or two or more clients. Okay, in that case there could be what conflicts of interest. Okay, maybe bias, or you could, there's also there could be cases where that practitioner will, anyway, in this case, this client, this being a tax practitioner to these two or more clients who was cause conflict of what interest. Secondly, the interest of a tax practitioner will respect to a particular matter and the interest of a client for whom the tax practitioner undertakes a professional activity related to that matter and in what conflict. So these are the two cases. However, a tax practitioner may be required to resolve a conflict of interest in complying with the fundamental principles. It may be in the best interest of the tax practitioner to document the substance of the issue. So it's also possible for the tax practitioner to what to do. You document the substance of the issue, the details of any discussions held, in case you discuss with the clients or whoever, yes, you are experiencing the conflict of interest with, and the decisions made concerning that issue. Of a significant conflict, if for a significant conflict cannot be resolved, a tax practitioner may consider obtaining professional advice from the relevant professional body, that is for either from ICANN or CITN. Okay, the tax practitioner generally can obtain guidance on ethical issues without breaching fundamental principles of what confidentiality. If the matter is discussed with the relevant professional body or on an anonymous basis, if you do not want to know, if the tax practitioner do not want the professional body to be aware of the what individual or the company, okay, you can be anonymous and present the situation forward for guidance on how to go about it so it doesn't affect the conflict of interest that exists. Okay, or with a legal advisor under the protection of legal privilege. If after exhausting all these relevant possibilities, the ethical conflict remains unresolved, a tax practitioner shall, where possible, refuses to remain associated with the matter creating the conflict. The tax practitioner shall determine whether, in the circumstances, it is appropriate to withdraw from the specific assignment or client. So when it comes to this case where all these other options are exhausted, the tax practitioner can determine to withdraw from whatever is causing the issue, can decide to excuse me, so the tax practitioner can decide to leave the firms. Okay, yes, it's very possible. And so just to avoid that conflict of interest, okay, when all these other options have been exhausted, to withdraw from whatever is causing the conflict of interest. So that's all we have for today. Stamp duties and basic ethical issues. Those are the two topics we looked at in taxation. So this is all we have for today. Kindly, no question. Wow. Why don't we have questions? I believe Madam Gloria was able to hear. Okay, she's still on. No questions. Okay, that's all right. But I want to encourage us to keep reading and keep practicing questions. Okay, don't just try to also go beyond what we are doing. Like if you have other questions, if you have access to other questions, try to solve more questions, practice more questions. Okay, and also reach out if you need I to explain anything to you concerning taxation. So that will be all for today. Thank you very much. Have a lovely night's rest. We'll see you next week. Good night for now.